You wake up on a Monday morning, stretch, reach for your phone to check your bank account, but the app keeps spinning. It just won't open. You think either the internet is down or the servers crash. Get annoyed, but don't dwell on it too much. You have breakfast at home, and on your way to work, you stop at a coffee shop thinking a hot espresso would do you good, but at your usual place, the POS device isn't working. Luckily, there's an ATM nearby, but what's this? You see a paper hastily stuck on the screen saying, out of order, and you think to yourself, what the hell is this? Then, when you look around carefully, you notice something strange. Everyone on the streets has the same tension you feel. Small groups are gathering in front of bank branches. The doors like walls. What you called a server issue, until that moment suddenly turns into an ice-cold reality. Your money isn't just temporarily inaccessible, it was never really yours. It was just a number on the screen, and someone turned off that screen. They pulled the plug on the system. This scene sounds like the opening of a Hollywood movie, doesn't it? But believe me, it's not fiction. This is exactly something that happened in history, and not in faraway, forgotten countries, in places considered modern and developed. Let's go back a bit to Argentina in 2001. Mountains of accumulated debt and an economy mismanaged for years. People smelled it coming, trying to withdraw their money as soon as possible, convert to dollars, and flee abroad. What does the government do when cornered? They slam on the brakes and activate the corralito. In our language, it translates to little corral, but for the people, it wasn't corral, it was literally a cage. Withdrawals were restricted. You could only withdraw 250 pesos a week. Dollar accounts? They were all converted to pesos at a terrible exchange rate. Your entire life savings, house money, retirement dreams, business expansion plans, melted by more than half in a few weeks. The middle class was pushed off a cliff overnight. Then, the sound of pots and pans rose across the country, like an angry national anthem. This wasn't the only example. What happened in Cyprus in 2013? For the EU bailout package, banks were completely frozen. Money was directly deducted from accounts over 100,000 euro, meaning it was seized. Yes, you heard right. To save the banks, they took your money from you. This didn't just hit the very rich. It struck small shop owners, retirees, families sending kids to university. Bad managers stole dreams from the entire population. Then Lebanon, starting from 2019, corruption, bad management, and then capital controls came. No matter how much money you had, you could withdraw only a few $100s a month, if you were lucky. The rest? It sat on the screen, but didn't reach your hands. You know it's there, but you can't benefit from it. What a strange situation, isn't it? In all these events, the same bitter truth was there. My money that I sacrificed myself to save all this time was actually under their control. But things like this don't happen in America, right? I wish. 1933, the Great Depression days. Roosevelt declares a bank holiday one morning. For 4 days, every bank in America, from the smallest town cooperative to Wall Street giants, is locked. People can't withdraw cash. Businesses stop. The economy hangs in the air. The world's most powerful country has to lock its own money to prevent the system from completely collapsing. So, what's the common secret of all these crises? Fractional reserve banking. Banks advertise to you, your money is safe with us. The truth is, they don't stack the money you deposit in the vault in your name. They only keep a small portion, fraction, on hand and distribute the rest as loans. This system creates credit, grows the economy very smart. But at the same time, it's a giant house of cards. This house of cards stands on one thing: trust. As long as everyone believes my money is safe, I can get it whenever I want, the system runs smoothly. But if someone whispers, what if? A bank run starts. Imagine you're watching a show in a theater among dozens of people, and someone from the back shouts, fire. Whether there's really a fire or not doesn't even cross our minds. The only thing we'll do is leave there safely right away. Even if not everyone runs, once enough people start running, chaos is inevitable. Governments know this very well. So, in a crisis, the first thing they do isn't to protect you, but to keep the banking system standing. In Argentina, Cyprus, Greece, Lebanon, the same logic everywhere. Let's save a ship, think about the passengers later. As for FDIC, we're relaxed thinking it protects up to $250,000 in the US. That's actually a psychological pill. If everyone demands at once, that money would never be enough. The purpose is to prevent you from panicking. Now we're in the digital age, everything in your pocket, fintech, crypto. Are we safer? Quite the opposite. There used to be cash, the last resort, the escape door. Now it's almost gone. If the server crashes, if the account is frozen, if your access is cut with a few keystrokes, your wealth instantly becomes inaccessible numbers. You'll be left stranded like the citizens in Lebanon. When banks close, the effects spread like a chain. Salaries can't be paid, layoffs start. Markets can't send money to suppliers, shelves empty. Panic jumps to the market. Everyone tries to sell something. The fabric of society starts to crack. History is made of repetitions. In Argentina in 2000, in Greece in 2015, in Lebanon in 2019, everyone was saying it won't happen to us. Even today, millions say the same thing. The most bitter lesson is this: access equals ownership is not. That beautiful number on the screen looks like it's yours. But the moment the system says not anymore, that number stops being yours. So what to do? Not panic and stuff money under the pillow. We need to build resilience. Spread the money to different places, different forms, multiple institutions. If possible, different countries. Tangible things like physical gold, silver, real estate. These aren't old-fashioned. They're like backup oxygen masks that let you breathe in a crisis. Because the scariest truth is this: banks don't even have to fail. People thinking they're failing is enough. Once that belief is broken, recovery is almost impossible. One day when the doors close, the mask completely falls. Banks aren't neutral service providers, they're power structures, intertwined with governments, global markets. And you're not actually a customer, you're a piece in this game. The game runs beautifully until it suddenly stops working. So don't forget this. If your money is really yours, the system shouldn't be able to take it from you. But in the current system, it's not like that. And history has shown us this repeatedly in a very harsh way. If this video gave you a new perspective, subscribe to my channel. There are dozens of similar videos on my channel. See you again. Goodbye.